Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good evening everybody. Welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing well. It's about 30 minutes after the market closed Friday afternoon. I'm not going to do any preaching or any lessons or anything in between. I get the majority of people are investors. I do. I definitely sympathize with you. So I'm not going to sit here, oh, you should have listened to me when we lost the 50-day moving average. Well, it's just certain things in life. Again, unfortunately, you have to kind of learn the hard way. And again, people woke up a couple of days ago and figured out, we're in a sell cycle. The selling didn't start 2 days ago. Okay. Selling started when we lost the 50-day moving average. It's just, again, from a technical point of view, this is where the selling started. We lost the 50-day moving average. And for all you guys who have been with me in the webinar for the last 16 years, you know, right? You know what happens next. To the extent of things we don't know, right? Maybe you sit below the 50-day moving average for 2-3 days. Maybe you sit there for 2-3 weeks, or, maybe you're in now since February. And, all this was a scenario that was playing out to see how much more of the selling would there be, right? And then they started talking about tariffs a month ago, 2 months ago, and we got down to the 200-day moving average. And I kept on reiterating the point. If you thought the 50-day moving average was a big deal, well, I mean, the 200-day is a big deal. So, we're here, right? We're here. Tariffs, in case you're living under a rock. Trump came out yesterday, basically, I think it was like 185 countries. A rollout plan. Everybody got taxed, right? Everybody got taxed under the sun. This is a great thing. This is a great thing for the economy. This is a great thing for the American public. This is a great thing. The problem is there's something called retaliation. And the retaliation was very, very aggressive, right? Incredibly aggressive today by the Chinese. They announced a 34% tax, right? A tariff, basically almost about 50% on all goods coming from, I'm sorry, I'm just reading your text here. As you can imagine, I'm getting a lot of text. So basically bringing 50% rate of all U.S. products. And as you can imagine, everything under the sun, right? Everything under the sun got absolutely destroyed. And when you look at the final numbers, pretty big here. The U.S. equities, they're registered the two biggest days of back-to-back sell-offs since March of 2020. Obviously, that was the pandemic. If you look at the numbers for the week, pretty staggering. You got the S&P down 9%, the Dow down 8%, and the NASDAQ basically plunged, right? Plunged 10%. If you're wondering how bad this was compared to, let's just say, a 9/11, the week after the market opened up, the S&P was down roughly 14%. So these are pretty big numbers, right? These are pretty big numbers. And again, like I said a couple of minutes ago, I have the utmost sympathy for investors who are sitting there worried about their finances, worried about tomorrow. Is there more selling coming? Is this the bottom? And again, we've been talking about since we lost the 50-day moving average. It's a social media thing. Everybody's looking for a bottom. Every video, stop looking for the bottom. Stop looking at the bottom until we reclaim back the 200-day. You have absolutely no reason to think there was a bottom. Again, we kept on talking about even yesterday I tweeted out. I go look at the chart on the monthly, right? Look at the monthly chart. This is before we came in today. I go, does this look like this is a bottom, right? So you can really see that, everything in life is about experience, right? You don't wake up one day and be a terrific parent, right? When my kids were born, especially my firstborn, I wasn't ready to be a dad, right? And you figure things out, right? You figure things out along the way. You're a much better parent. year 10 than you were year 1. You're a much better parent year 20 than you were year 10. And that's how trading is as well. So if you're a trader and you haven't come across to something this dramatic, right? I get it, right? I get it. If you don't have any type of guidance or you're trading by yourself, or worse, you're looking for advice for some 20-year-old or 15-year-old on social media, I get it, right? You're behind the 8 ball. I get it, right? But again, to be completely sympathetic, as I say it again, you will be a better investor year 5. You will be a better investor year 10. And I've mentioned this numerous videos because, again, guys, if all you guys who are with me in the webinar, I'm a very direct guy. Okay, I bite my tongue in these videos for what I actually want to say 90% of the time. Okay. Unfortunately, I don't have the warmest personality. So I try to be as sympathetic as possible, but I also try to speak in reality. And if you've been following me and you've been in the webinar, the action has been phenomenal. I hate to say from the investment point of view, because I get it. I mean, it's just complete disaster. But if you're trading the market, if you are a trader, not an investor, but a trader, you're an active participant who trades both sides of the market, you're still getting some really wonderful opportunities. You're not getting the broad opportunities, right? You're not getting the safe opportunities. When we first lost the 50-day moving average and we went down for a month straight, you're getting extended opportunities, right? Extended opportunities with a lot of exposure because we can rally at any time. So things are a lot harder. Don't let me paint a picture. This is a day at the beach. It's hard. Right? It's absolutely hard. But if you're prepared, right? If you're absolutely prepared every single day that we talk about being on both sides of the ledger, trading comfortably with confidence on both sides of the ledger, at least you have a swinging chance. Again, like I say all the time, the past is the past. We don't live there anymore, right? What's done is done. If you ignore the 50-day moving average, learn from it down the line. If you ignore the 200-day moving average, learn from it down the line. Write it down, right? Write it down. Put a sticky pad right in front of your monitor and says, when we get back above the 200-day moving average, risk is on. When we get back above the 50-day moving average, it is on with both hands. That's when you push. That's when you get aggressive. Here's a flip coin, right? When the market loses the 50-day moving average, if you are an investor, I'm not even talking about from the trading aspect. We know what to do with the trading aspect. You get more defensive. You start putting on hedges, right? When you lose the 200-day moving average, you do not want to be long, okay? And for God's sake, stop looking for the bottom. Nobody cares. Nobody cares about the person who calls a bottom. Bottoms are irrelevant, okay? Everybody has a bottom. You, me, my mother-in-law, my poodle, we all have bottoms. They're irrelevant. Nobody cares. So what's done is done, right? You learn from it, you move on, okay? Now the question is, what happens next? We got some data today. Some jobs data came out. To be fair, the jobs number was great, right? It was great. They blew the jobs number out of the water. Trump came out and says, look, we're winning. Okay, we're winning, right? We're winning. Powell came out at 11 o'clock, basically had his hawkish stance. Trump wanted him to cut rates. As we all know, they do not like each other, at least on the surface. And basically, he came out with a hawkish stance, said it's too early. It's too early to tell how the tariffs will implicate inflation, implicate this, implicate that. So basically, there was a nothing burger. There was a Q&A, and the market resumed selling. Again, really, really ugly numbers. The end of the day was just pretty bad. Yeah, the Dow down 2,200 points. NASDAQ down 960. That's 6% losses all across the board from the S&P, the NASDAQ, and 5.5% from the Dow Jones. And I talked about in the webinar, I tweeted it out. I kind of started thinking, right? When I went to the gym, I always do my thinking in the gym, and I said to myself, well, how are we prepared for Monday, right? How are we prepared? Here's how I think Monday's going to play out, or excuse me, how I think between now and Monday is going to play out. Okay. I think in a perfect world, and I don't know when you're going to see this video. Kenyon might release it tonight, Friday, Saturday, Sunday. So I don't know when you're going to release the video, when they're going to release the video. But here's at least my initial thoughts. Okay. I believe there will be some sort of dialogue, open dialogue between China and the United States. Okay. I wouldn't even be surprised as I'm recording the video at, again, 4:30 in the afternoon on a Friday, that they already started, right? Or at least scheduled the call. What I think in a perfect world, right, an absolute perfect world is if we get some sort of headline between now and the open on Monday, that there has been at least an open conversation between China and the United States about potentially having a negotiation going, right? An opens line of communication. And I think a first step to making everybody happy, right? Maybe start softening some of the tax on both countries. What I think is going to happen if we do get that headline, I think the NASDAQ gaps up 700-800 points, just like that, right? Absolutely just like that, because that's what the market needs. That's exactly what the market needs. Here's a flip side, right? Here's a flip side. The flip side is, as my mom used to say, well, still does say, I shouldn't say, used to say, still says, no news is good news, right? And this time around, no news is actually bad news. Because again, if there is no lines of communication, if there is no at least ability to sit down, right? At least sit down and have an open dialogue of, hey, let's work things out. Yes, I think the market will continue selling on Monday morning. The problem is everybody has the same game plan for Monday morning. I've already talked to a couple of my friends. I saw it on social media. You see this, it's just common sense. Well, if we get a gap down, I'm buying the gap down, right? And again, that's not wrong, right? That's not wrong, but just keep this in mind, right? Keep this in mind. If you're buying a gap down after two really, really big gap downs, you're not technically wrong. It's kind of the right thing to do, but it's an emotional act, right? It's an emotional act, and you're hoping that we bounce at some point. You're hoping that some sort of news comes out that's going to start rallying the market up 700-800 points. That's an emotional trade, right? You can't go into any single trade with an emotional understanding that something might or might not happen. You want every single trade to be very organic, whether it's to the upside, to the downside. Now, if you're in the middle of a trade and all of a sudden news breaks out that, hey, there's a negotiation, open up, beautiful, right? That's exactly what you want. But the last thing you want to do is buy a gap down. There is no news, and we keep on going lower and lower and lower, right? And the flip side to that is, well, what happens if there is some sort of, headline that, hey, we're making headways, right? We're going to make sure that, everybody is happy with this negotiation, and the market gaps up 700-800 points. Are you really going to start buying stocks up 700-800 points? So, over the weekend, the market is going to make traders on both sides of the market feel very, very uncomfortable. That's a fact, right? It's a fact, because I already know. I already told the guys in the webinar. I go, what's the point of what's the point of me putting out a watch list? So we're either going to gap up 700-800 points or be down another 3 to 5% on Monday morning. So going into Monday, I want to see how obviously the market opens up. I want to see how channels start to develop. If we do get some sort of good news, I want to see how the market handles that first good news pullback. If we get obviously no news, I want to see how the aggressive potential pullback is going to continue. And I'm looking for obviously upside channels if we do have an aggressive downward. Again, I'm not looking to buy the dip. I'm looking to buy a channel if they start rallying and take out a previous 60-minute high. So my game plan is kind of set. The most important part is take a deep breath. Right? Everybody take a deep breath. I'm doing this for a very, very long time. Really, really long time. And for all you guys in the webinar, you saw what we did this week. This week was actually really good. Okay, it was actually really good. If you look at the pivots today, there was only 4 pivots. The reason why there was only 4 pivots, these were the only stocks, right? You got Robinhood, you had PLTR, you had Tesla and MSTR, right? These were the only 4 stocks that I found that had at least some sort of daily support to confirm. If you looked at everything else that gapped down today, everything got murdered, right? Everything. Amazon, Nvidia, every stock, literally everything got murdered. Apple, yesterday was down 20. Today got destroyed again because, again, their exposure to manufacturing outside the U.S. is every country. So everything got murdered. So these were literally the only 4 pivots of the day. I think most of us, right? I think I can speak for everybody in the webinar. I think we were done by 10:30? Right? 10:15. Really great pivots. So you had Robinhood, and this is what I mean by there were stocks that had at least a support to lose. So here, let's start off with Robinhood, right? So Robinhood 35 if it builds below, can flush. And the reason why 35 was a big number on Robinhood was 35, right? 35 was the bottom of this channel here. You see the bottom of the channel here on the 310 lows, right? 35.23 was the low. You see this candle? So once we lost this candle here off 35, the stock got murdered, absolutely murdered, went all the way down to 31.50s. Great job for all you guys who caught Robinhood. The second one was PLTR. I was shocked. I usually don't trade PLTR. I traded it today. Not bad, man. Not bad. So you had 78, 75, and 77 held the pre-market lows twice. If it builds below, it can flush. Again, here's another stock that had a range, right? You see the low here, right? You see the low here on 310. The low for PLTR was 74.75. So once it lost that 74.75 and confirmed the pre-market lows, you see these two candles here, right? You see the two candles here, 77 low, 77 low. Once it lost that 77, got absolutely destroyed, went all the way down to 71 and change. So that was really good. Tesla got smoked. Got absolutely smoked. So 251.20s was the 20-day support. If it builds below, it can flush. Again, here was Tesla, right? So here is the channel right here. You see this channel right here? This big candle here, the low of this reversal candle a couple of days ago was 251.20. So that was the 20-day support. So once it lost the 251.20s, traded all the way down to 243s, right? 243 was the low from March 31st and traded all the way down to 336. Obviously, this thing has still some room to go, but obviously we don't know what's going to happen on Monday. Is announcement, no announcement, but again, really good move on Tesla. And the last one was MSTR. MSTR, I didn't trade. I know it triggered 276, 272.80, traded down to like 260 and change before a really aggressive run up. Bitcoin's been holding up very well, but still it went down about 10, 11 points if you traded it. So really good day. I mean, really good day. And the most important thing is, we saw the market pretty well. Again, for all you guys in the webinar, for many years, I mean, even for many, for a few weeks, you kind of see what we do on both sides of the market. We're not biased. I'm not biased, to the bull side, to the bear side. I'm biased on the channel, right? I don't fall in love with the stock. I fall in love with the ranges. And once the ranges lose, and you see that formula over and over again, you have short-term institutional money flow in that direction, betting the option side, deep out of the money with short-term expiration, and it confirms usually good things are going to happen. If you are interested in pivots, guys, again, there's a really cool way to view it. All it takes is 30 days. 30 days. Come to the webinar, check it out. If it's for you, it's for you. If not, again, we can still be social media buddies. But the most important part is you got to grow from this, right? You got to get better from this. You have to mature from this. You have to figure out a way that this doesn't happen to you again. And you're sitting there helpless, hoping that something is going to happen, that a white knight's going to ride in on a horse and save the day. Guys, God bless everybody. Hope everybody is doing well. If anybody needs to reach us, you could always contact us. God bless. I wish you all the best, and may God be with you. I'll see you all on Monday.